Unlike the other weeks, this week the couch investing portfolio has outperformed the S&P 500. Portfolio was up 2.21%, while the S&P 500 was up just 1.63%. But I'm not just celebrating just yet, because, well, overall, since the start of this portfolio, which was just over a month or so ago, we are still underperforming. We're down 1.56%, while the S&P 500 is up 2.63%. Now, during the last week, I did make some changes to the portfolio. I'm going to discuss those and then discuss a couple of news related to some of the positions here. Now, over the long run, I do still think that the top 5 holdings of the portfolio will be outperforming the market. And so the portfolio as a whole will be outperforming as well. I don't know when that will happen, but over the long run, I do still think that this portfolio will be built out as a pretty strong one. This is not the final portfolio because, as you can see, I've removed a position and added a new one as well. So I'll start off with the new addition to the portfolio, and that's DLocal. DLocal reported earnings last week. I covered that one on the channel. Stock crashed around 15% or so. I thought this was a bit of an over-exaggeration. If you want to hear the whole summary, the video will be in the top right corner. Right now, DLocal here sits at 3.09% of the portfolio. I purchased 200 shares at $15.02. Currently, it sits at $15.30. Now, this came at the cost of selling another position, the other position being Alibaba. I bought Alibaba 50 shares at $72.32 and sold at $73.57 for a 1.73% gain. Now, the reason why I added Alibaba at the start of this channel is because I do still think that there is a lot of value to that. That was before the whole TikTok debacle came into play. Then things accelerated and I was like, you know what? Enough risk in this portfolio with the 2 smaller positions here, Rocket Lab, Appcelera, and even Funko. Having another Chinese company in the portfolio right now with everything that's going on with TikTok, with Temu, elections coming up later this year, I thought maybe it would be best to sell those and add a new position being DLocal here. I did also add a couple of extra shares here in my Snowflake position, purchased another 10 shares, 22.22% increase at $155.5. Snowflake is now 8.83% of the portfolio. I know we talk a lot about Palantir on this channel. Where is Palantir in that portfolio? Palantir will be coming to that portfolio pretty soon. Just thought that Snowflake, with the big hit that the stock got after the earnings report, I do still think that they send back guidance because of the new CEO coming in. They want him to perform well. So I bought on the weakness, and then this is probably going to be a 1-year thing. If the stock reacts accordingly with regards to the upcoming results and guidance, I'll take my gains and allocate those funds to other positions. Currently, with regards to Palantir, despite Palantir having amazing announcements each and every day almost, I'm still waiting and thinking about whether or not I want to go all in directly into Palantir right now or wait a little bit, do it step by step. Probably I'll update you in a week or so. As for the top positions of the portfolio, so number 1 here is Tesla. I'm overall down 7.16% on that. I did not add more shares last week. Last time I added was here March 15, 20 shares at $163. Now I'm currently waiting to see whether or not we're getting more information out of the company or whether or not we're getting more information out of the stock, meaning if the stock goes lower or not. As for PayPal, didn't really add since I opened the position, I think. It's the number 2 position of the portfolio. Return here is already over 10%. It is 13% of the portfolio. I'm still extremely bullish on that company. As for SoFi, last time I added was at $7.36, added there 500 shares. You might say, oh, why didn't you add here when it went just under $7 or so? Well, I didn't add to SoFi, I added to some other positions. Again, it's all about timing, and I'm not every day, all day looking at the portfolio and seeing exactly what happens with the stock. Again, with SoFi, it's already right now 11% of the portfolio, average cost price of $7.69. For me to actually reduce that by quite a lot, it will have to drop way more than just 10 cents under $7 or so. Then with regards to Google, Alphabet, that's 10.65% of the portfolio, average cost price of $138.8. We're already up 8.66% on that position. Now, with regards to this position, we did have some positive comments from our friends at Wedbush. So they talk here a bit about the Apple licensing deal or the potential Apple licensing deal. We've talked about that on the channel as well. So they're saying here we are beginning to see signs of a reversal in sentiment emerging. The brokerage raised its price target on Google stock to $175 from $160. They say here, we believe the perceived structural risks to Google search are overstated and continue to view Alphabet as a net beneficiary of generative AI. Alphabet's competitive advantages are multifaceted. The company has an unmatched breadth of data to develop and train AI models. Again, I've talked about Alphabet a couple of times in the last couple of weeks. I do still think that when it was at $130 or so, sentiment was really that bad and really ignoring all of the core Alphabet business. I did the same video about, Alphabet when it dropped under $100. I did the same video about Meta as well. People were fully focused on Reality Labs, on the metaverse, that they completely forgot about Meta's core business, which, as we see right now, is extremely, extremely profitable. Now, whether or not the partnership, the deal with Apple goes through, we don't know. We'll have to wait and see for an official announcement. Again, all the details I've talked about in another video. If it works out, I think it's a great deal for Alphabet, and it also shows the weakness with regards to AI or their move towards AI functions, products, you name it, with regards to Apple. Although with regards to Apple, I do still think that they'll market their next suite of products as AI products, AI iPhone, AI iPad, MacBooks, you name it. You can do all sorts of AI stuff on your devices. Maybe that's why they want to partner up with someone like Google. Now, talking about Apple, that's the number 7 position of the portfolio, 7.82% of the portfolio actually, with an average cost price of $179 or so. Return, we're actually down 3.68%. because of the bad news that got out last week. So Apple sued by the Department of Justice over iPhone monopoly claims, in my opinion, rightfully so. Not all points here are, let's say, legit, but overall, I mean, if you're an Android user or even if you're an Apple user, but you wanted to go out of the Apple ecosystem once, you know how difficult that is. If you're a developer, you know how much Apple is taking from you, you know how much Apple likes to change the rules so that they can profit and so that you can or have to work harder, go through extra loops, etc., etc. And if you're Epic Games, well, I don't really have to explain to you what is going to happen here. So they say here, the consumer should not have to pay higher prices because companies violate the antitrust laws. If left unchanged, Apple will only continue to strengthen its smartphone monopoly. Apple does make the majority of profits when it comes to the smartphone industry. Android is still the dominant overall operating system around the world. The suit here accuses the company of increasing friction for those looking to switch to the competition. We've talked about that for quite a while here. The Apple ecosystem, the walled garden, is, well, one of the best on the planet, if not the best. So they talk here about 5 categories, suppression of 5 categories, super apps, which combine a broad range of functionality in a single application, cloud streaming gaming apps, messaging apps, digital wallets, and smartwatch cross-platform compatibility. The last bit is a dig at the company's long-standing practice of ensuring that certain features only work correctly when paired with other Apple devices. It's a very, very long thing. They also talk about the fact that when someone messages from an iPhone to an Android and vice versa, they purposefully reduce the quality of the Android pictures, the videos, the messaging is different colors, you cannot reply, you cannot edit, stuff like that. Again, this is all to make sure that the Apple user, well, feels superior to an Android user and maybe might make the Android user switch to an iPhone. Whether you think this is fair or not remains to be seen, but I do agree that the government should not have a say whether or not I love to be in an ecosystem that works perfectly together. Apple Watch, earbuds, iPhone, iMac, stuff like that. Apple built that ecosystem. Apple provides the best services to its users. And I think the government should not be able to touch that. On the flip side, yes, it is true that if Apple purposely reduces the quality of, well, the services that competitors offer, for example, through their own services, their own products, then yes, there might here be some antitrust issues. Again, remains to be seen what happens. but it does feel like in Europe, in the United States, probably in other parts of the world as well, they are feeling the weakness a bit in Apple right now. No growth last year, slow or struggling in China, no AI products, no Apple Car, Apple Vision Pro, to be honest, was probably a flop. Nobody even talks about that anymore. So they felt it, and now they're going on the attack. Dan Ives at Wedbush, again, remains a bit more positive on this whole story here, so the lawsuit may result in a hefty fine for Apple and potentially changes to its business model down the line. We do not expect any business model changes for now, but Apple clearly is going to have to find a way to eventually settle this case, pay a hefty fine, and ultimately find some compromise with developers on the App Store structure down the road. In my opinion, the best days of the iPhone, the iPod Touch, was when you could easily install Cydia. If you don't know what I'm talking about, the picture will pop up on the screen. Those were the days. No, but joking aside, right? Joking aside, they have to find a solution where everybody wins, where you could sideload, where the ecosystem gets opened up a little bit, so the users get more optionalities, the users from outside the ecosystem suddenly get exposed to the Apple ecosystem, and then Apple has to find a way to monetize all of that. Not being super greedy, but at least reach a point where it's a win-win-win. Now, I don't know how long this thing will go on. I don't know how much this is going to cost Apple. I don't know what changes they're going to make, but they're certainly feeling the pressure right now, especially with the fact that they are a bit behind with everything with regards to generative AI and AI as a whole. Sentiment around Apple, the stock or the company right now, is really not at all-time highs. And let's not forget, it's not the most valuable company on the planet anymore. But so far, it's still in the portfolio, because I do still think that, well, Apple remains Apple. There are billions of devices around the world. They are pretty loyal, so it's still there as a sort of cash-ish position. Now, talking about the next position here is Intel. Now, Intel, I did add 25 shares to that position, a 33.3% increase at $41.82. Now, during the week, the stock did go up a little bit, but more recently, we've got good and bad news with regards to Intel and some other semiconductor companies. The first good news is that Intel is awarded nearly $20 billion in grants, loans by US to boost chip production. That's great. That makes them a bit more comfortable in all the investments that they're making in the United States. Now they can also maybe focus on attracting more foundry clients. Remains to be seen who gets on that list. But after that good news, during the weekend, there was a more bad news that came out. The bad news is that China is set to block use of Intel AMD chips in government computers. And so right now, Intel stock is down close to 4%, and the same with AMD. We've seen this with regards to Apple as well. And to be honest, we've seen this with Nvidia when the US imposed a sanction on what type of chips can go to China. And I've seen a report that said that, well, before that was officially announced, some vendors in China, some companies in China just stockpiled Nvidia GPUs. Maybe this might push forward some demand right now because of these rumors. And so they're going to order quite a lot of chips, of devices from AMD and Intel. Remains to be seen if this actually becomes a thing. But again, just like with Apple, this is just for government computers. And then more recently, this came out, Qualcomm, Intel, Google, part of consortium aimed at going after Nvidia. So there is this group known as UXL Foundation, intends to build software and tools that can power a number of AI accelerator chips, regardless of who builds them. We're actually showing developers how you migrate out of an Nvidia platform, Qualcomm's head of AI and machine learning, Vinesh, told Reuters. Nvidia did not immediately respond to a request. UXL will eventually recruit Amazon Web Services, Microsoft Azure, and other chip makers. The group said it intends to eventually support Nvidia hardware and code in the long run. This is going to be an interesting story to follow. Now, going back to Intel, currently I'm on the sidelines. I'm pretty comfortable-ish with my position. Remember, next quarter is going to be a weakish quarter. I'm still looking for a stronger guidance, especially for the second half of the year, and maybe some more comments with regards to IDM 2.0. Remains to be seen. Right now, I'm happy with the allocation. If the stock drops below $40, I will probably add a bit more to that position. Now, going into the last thing here, I'm not going to talk about Funko or Palo Alto this week because there really is nothing to add there. I want to talk about DLocal. A bit of the reasoning behind that. It's purely because, well, one, this is only 3% of the portfolio. Average cost per share, $15. Now, like I said, they reported earnings not so long ago. As you can see here, the stock crashed quite a lot. Right now, it has a market cap of $4.4 billion. Forward PE 24.2 times, EV to sales in the next 12 months 4.3 times. And if you look at the analyst estimates for the coming years, for a profitable company, the growth rates here are quite exceptional. Now, with Pedro Arnt being the sole CEO of the company, Pedro Arnt, if you remember the name, he was previously CFO of Mercado Libre. And so now that he's permanently the CEO of this company, I have a lot of trust in him. I think at $4.42 billion, at these growth rates, being profitable, yes, short term, they said they're going to take a hit, a bit like Adyen back in the summer of 2023, where their profitability got hit a little bit because they started to invest heavily in their business to prepare themselves for the next leg of growth. And well, since then, the stock has more than doubled. I don't know if DLocal will double in 6 months or so, but I do still think that years ahead, this company will be worth more than just $4.4 billion. Of course, a lot of things can change during the years, but seeing the track record of that company, seeing the track record of Pedro, I have a lot of conviction behind that. That's the thing. It's not belief per se, it's more about conviction. So overall, to conclude, right now, yes, we are still losing 1.56%. Hopefully by next week, we will be break even or maybe even better as well. Remember, this year is also a lot about elections. It's about rate cuts, how many, when, etc., etc. Whenever that will happen, I don't know, that's macro stuff. It is important, especially for those high growth companies that are not profitable just yet. That's very important because I do think that when we will flip the switch towards, well, inflation is under control, rate cuts are going to happen even faster than expected. These are the companies that will probably jump quite fast. Then the others will definitely benefit from those rate cuts as well. So remains to be seen. Overall, I'm still making some small changes here and there. Yes, I know it's tech heavy. This portfolio is tech heavy, but in my opinion, I mean, why not have a tech heavy portfolio? Yes, I am looking at a company called Lululemon. I'll talk about that later today or tomorrow. So overall, that's about it for me. If you enjoy this type of videos, leave it a thumbs up, subscribe if you're not, and I'll see you all in the next one. Bye-bye.